Let's be honest, most traders think they understand support and resistance until price break through their perfect zone and wipe out their account again. The truth is, the problem is actually not your setup. It is how you are marking out your zones. Most traders draw lines where price once reacted, not where the smart money actually positioned. Imagine if you could spot two zones, the ones institution defend, and trade them with full confidence. Stick around, because in today's video, I'm going to be showing you how to properly mark and trade support and resistance the right way, so that you can stop guessing and start trading profitably. If this sounds interesting to you, kindly subscribe to this YouTube channel and don't forget to turn on your notification bell so that you do not miss out on our subsequent videos. Also, do not forget to like this video and at the same time leave a comment by telling me the topic you want me to cover up next. And without wasting much of your time, let's get started.
So like I said, support and resistance and how to mark your support and resistance properly. But before I actually show you how to mark your support and resistance properly and how to trade it, we have to actually understand what support is. What I consider a support for me is a previous strong resistance tested multiple times before it gets broken, which means if this is an area where price tested multiple times before breaking it, that is what I consider a support to me. For resistance, a previous strong support where price tested multiple times before breaking it to the downside is what is called resistance for me. That means if price tested this guy multiple times before breaking it to the downside, that area automatically becomes a resistance to me. When it comes to support and resistance, it's not just an area where you just draw any line, because I've seen people, they just come and draw any line. When people just go to their charts, they just start drawing any line, they just start drawing any line, they just start drawing any line. That is not how to draw your support and resistance. Now, before I show you how to properly draw your support and resistance and to show you the key rules I look for when mapping out my support and resistance, let me just break support and resistance down to you in layman terms in a way that we easily be able to grab it. Let me give an example of someone going to the club. Let's say there's a skinny man going to the club, and here is the club right here. So in this club, you have two bouncers and you're trying to enter the club. While going to the club, these two bouncers resist you from entering to the club, which is there. Because bouncers are usually strong, right? So they actually push you back. They resist you from entering into this club. You came back again after they push you away to try again to enter. They still push you back because these bouncers are hefty men. They are tall. What is happening there is that they are trying to push you away. They are resisting you from entering, from passing through. Now, let's say they push you again. You went back. Then you went to go and take pepper spray. You hide it. Then upon coming back to try again to test if you can enter that club, you spray the pepper spray on their face. Now that you spray the pepper spray on their face, they are not able to resist you, right? Then you break aggressively and quickly run enter. Now you are not in the club, right? Now you've been able to break the barrier that was preventing you from entering into that club, and those two barriers are the bouncers. Now, what do you think will happen when you are coming back to come out of the club, knowing quite well that this time around the bouncers have washed away their pepper spray from their faces? Do you think these bouncers will let you to pass? No, it's not possible, because you spray them before you pass. When you are coming back here, these two bouncers, they will likely 100, in fact 70% not allow you to pass. Now that ability of them not allowing you to pass is what? Support. Remember, it was acting as a resistance before because it was a strong resistance before. Two FT bouncers pushing you from passing by, but you finally scale through, you entered inside. By the time you're coming back, do you think they will just allow you to pass? No, they will not allow you to pass anymore. They will resist you from passing to go outside, right? Because they want to, let me just give an example that beat you. That process whereby, and you won't want to come, even if you reach here, you see those FT men, you get back to this region, you see those FT men looking at you, scary look. What do you think when you get to this point? You will run back. Can you see now that point now that was acting as a resistance to you before, that you tested multiple times, is now acting as what? Support. Always have that at the back of your mind. You can see now that this resistance, which was a strong resistance before, has finally turned to support region. And why? Because it was a region where you tested multiple times. You tried to enter into the club multiple times, and those bouncers did not allow you to enter until you find a way around it by spraying them. And by the time you pass through, coming back, you won't be able to pass through because they want to hold you from coming through. When it comes to resistance now, I told you that resistance is a previous strong support that was tested multiple times. Now, let me give you that example again using the issue of this club. Now, let's say you enter into a club. When you enter into that club, there's a rules in that club that you don't come with drinks and don't do this and don't do that, okay? Or probably maybe you're already in this club right now. Now, while you're in that club, maybe for some reasons you did something, you took some of the club's this thing and you've not paid and everything. So after you want to go out, now these are the two bouncers here. The same set of people that allowed you in before. Let's say they know you, they allow you in. But when you get to the club, you stole. Now you want to pass, right? Now they see that you are with the club item that you cannot go home with. What do you think they will do? they will resist you from passing. They'll say, no, Mr. Man, go back and, go and return those items. Go back and return those items. Maybe you took one of the club this thing, or you went to an hotel. Let's say you went to an hotel and let's say, okay, let me use an hotel. You went to an hotel here and you took the hotel stowaway. Now, upon taking the hotel stowaway, then you want to pass, they search you. They say that you are with the hotel. They say, Mr. Man, go and return this towel. Okay, you said, okay, you went back, act as if you've returned the towel. Then you try again to pass through. They search you again. They say that you are still with the hotel, maybe you are with some of the hotel's stuff again, that the hotel bed sheet or stuff like that. What do you think? Will they allow you to pass? No, they still send you back again. You can see now they are preventing you from passing to the downside to go out, right? Now, only for you to now want to come again and the same people that was acting as support did not allow you to pass. Finally, when you came back, you find your way, you ran and you passed through. Maybe there's nothing again, you finally passed through. Now, that means that support has been broken. Now, next time when you want to go back to that hotel, now let's say the management has given the security men that say, when you see this guy, don't allow him in again. What do you think is going to happen? Do you think when you try to go back to the hotel, they will allow you in? No. That means now, when you go back there, they will not allow you. You have to pull back. What just happened? That means a region that was acting as support for you, the same hotel where the security was preventing you from coming out before, they've now acted as the same set of people now preventing you from doing what? From going back into that hotel. You can see it. So just have this concept in your head, because you will use it a lot. It really, really help you to map a proper support and resistance. So now, what are my own rules for marking support and resistance before we move to an example? Many people, when they want to mark support and resistance, usually mark support and resistance from left to right. For example, just people come here like this, they just start marking top like this, they will go back again like this, they will still mark this top, they consider it as support and resistance, they will just come back here, just mark anywhere. There's no rules, they just look at this low, they just mark it, they just continue marking, then they start waiting for a price to anyone that price reacts. No, this is wrong. Okay, you don't mark support and resistance this way. For you to mark a support and resistance, you mark your support and resistance from right to the left. It must be the current market structure from right to the left. You don't mark your support and resistance from left to the right. No, from right to the left. And for you to be able to mark from right to the left, you have to understand what we call drop base drop. What I call drop base drop, which means this is a drop, pullback base, then a drop, which means this is a downtrend. Drop base drop, whereby price break markets to the downside. And for an uptrend, you need to understand what we call rally, a base, pullback, and a break, rally. Now, please have these two at the back of your mind, because you're going to be using it a lot. Now, when you want to draw a support line, you look at the trend. What is the trend? Now, let's say the trend is downtrend. You see something like this, price coming like this. That means price is coming and you want to trade to the downside, right? Now, you want to mark your resistance line. You don't just come and mark this guy like this. You don't just come and say, okay, this guy right here is a resistance. You come back here again and say this guy right here is a resistance, and you come back here again and mark that this guy here is a resistance. No, you don't want to mark it like that. No, that is not a proper resistance. This is wrong. You already see that the price is a downtrend. You can see what I just explained here. This drop, base, drop, drop, base, drop, base, drop. Now, you don't just want to mark anyhow place because the lows of it and call it support and resistance. No, rather do you want to mark the top, because we see some people will still go and mark this top like this. They will call it resistance. That is not resistance. You don't mark resistance like that. Some people want to mark support. They mark the low as support. They mark the top as resistance. Some people just mark this top here as resistance. They come back here again. They mark this top as resistance. So what they wait for is they expect price, whenever price is going back there, to see how price reacts from it. No, that is not your resistance. That is the wrong way of marking resistance. When some want to mark support, they start marking support from the lows like this. Okay, just start marking these lows as support, marking these lows as support. This is wrong. This is not your support line. Some people might still put it like this. This is still not your support line. Some people might put it up here like this. No, this is wrong. The price has broken this. Okay, they say it broke resistance. The resistance, there's very resistance to act as support like this. Okay, this is actually wrong. Now let me now quickly show you how to go about it properly. Remember what I just told you about support. Our support region is what? A previous strong resistance area that was tested multiple times before breaking it. The same thing for our resistance. Our resistance region is a previous strong support area that was tested multiple times before breaking through to the downside. That is what it means. So how do you mark it? I told you that it's from left to right. Now let's say, for example, we have an uptrend before. We have a region whereby maybe price was moving to the upside. We have an uptrend before. All of a sudden, then price has flipped bearish. You see price coming back down. Now, for you to mark your support here, to know where price likely to move to here. Remember, this is the current leg now. We are in a downtrend like this. Since we are in a downtrend, you want to short, right? And you want to wait for price to go and to retrace to a resistance region and proceed to the downside, right? Now, the question is, how do you mark this resistance? Remember the drop base drop, rally base rally. Now, we're in a drop base drop here, which is this guy right here now, because the price is already in a downtrend. Drop base drop, which you see it in a downtrend like this. What you want to do is from this left, I told you that your support, if you want to mark your support and resistance level, it must always be from the right, which means it must always be from this region right here. Now, what should you do? How should you mark it? Will you just start marking random things like this, or some will even go and mark the top? You know, some people mark the top, some people mark the bottom, some people mark the bottom, while some people mark the top. No, it's wrong. What do you want to see? You have to remember this word. What do I call resistance? Resistance is a previous strong support area that was tested multiple times. So what you should look for is, you see all these low here is where we want to mark. We don't want to mark an eye. We have no business marking all this eye, all these eyes like this, because you want to mark our resistance. You must not mark all this eye. You must not mark all this eye. We must not mark all this eye. What we are interested in here is all these lows, right? That's what we want to mark. Now we're not just going to mark any low. We will check those lows. Which one has been tested multiple times before it finally break? Which one has two touch? There's what we call multiple touch, two touch. Your support or resistance must have minimum of 2 recent touch. What do I mean? That means you have to investigate all this side and look for the one that has 2 multiple touch. Now, if you look at from this thing from here, you will see that out of all this place, by the time we bring our line and start marking them, let's say we start bringing our line and mark the lows here, but which I will not advise to just be marking. Let's say we are just marking all the lows, because we also want to mark all their lows first that they broke, all this low. I told you from the right, that's where we start our marking. After marking all the lows, now start investigating it. Which one has multiple touch? By the time you come here, see, this guy has multiple touch. See, this break of market structure the downside, before price touch it, before pulling back to break, it reacted from this guy here. See this other one too. Right, so like I told you, this guy was tested multiple times. This guy too was tested multiple times. So our 2 area of focus will be what? This guy, that you see, this one was tested multiple times. It has 2 touch, okay? This is the first touch, and this is another. That means there's a 2 touch around it. By the time we draw the line, it's an area of 2 touch. We first draw this guy, but investigating it, we realize that there was another touch at this side, which makes it 2. So this our value resistance. When price got to this region before, they prevented it from passing. When it got there again too, they prevented it from passing before finally breaking it. That means it's these 2 regions now we will be focusing our mind. So every other one is not valid. It's just only these 2 guys. That's what we're going to be focusing on. But that is not all. Another thing again is that sometimes you might just have price doing this. Maybe price just doing this. Price break market structure to the downside. So I told you that you want to start marking it from the right to left. So price pull back again. Then before price break market structure to the downside again, price reacted from here, push back, still come back again, reacted again, push back before finally breaking. Now, what just happened now? This area is a strong resistance area. This area right here is a strong resistance area. It's a strong resistance area. Why? Because this area, I told you that your support and resistance area must be a region where price tested multiple times, and it must be a recent region. The testing must be closer to each other. It must not be far from each other. Now, by the time you draw this line, now let's say you draw this line, because price tested here multiple times. By the time you draw this line, by the time you now start looking, investigating at the left hand side, you start seeing that there are some cases whereby price has tested here multiple times too. For example, here like this. Let's say we bring it here. This is what happened here. Now, recently, price was tested it multiple times. Now, by the time you start checking again, the left-hand side, you start seeing that price already tested that before, right? Price might even have acted as resistance there before, for example, like this. Remember this one, price break, then pull back. Before the break, it tested again. Before the break, it tested again. Before it finally break. And I like it when price break with momentum candle, just break downside to momentum candle. Now, by the time you start investigating it, it must have a region of minimum of 2 touch. You look at this. This is 1, this is 2, this is, you can see 3. Let's say by the time you investigate it again, you see another touch here 4, you see another touch again 5. Then you see that it acted as resistance. So now this one acting as resistance here, you can't count it as multiple touch for it. No. The touch, you just want it, since it's going to be a resistance, it must be primary react when it was coming to break it multiple times. So this one cannot be considered a touch. Okay. Yes, but it's good that it acted as resistance. But the touch you want to see, if you want to mark our support, is price tested it multiple times before breaking it. You see, tested it multiple times, then break. That region becomes a strong region to look for entry. This is how support looks like. I told you a support region is a previous strong resistance region that was tested multiple times before breaking through to the upside. Let's say, for example, we have a downtrend where price was doing drop base, drop base, drop base, drop. Price just continue pulling back. All of a sudden, price start going back up. Where do you want to start marking for your support? You want to wait and see how price reacts. You want to see an area of strong resistance where price, break market structure to the downside, tested multiple times. Now, what you want to do is you want to wait. As price start approaching, price breaks, then price start approaching, this region here, you will wait. All right, now let's say we see price do something like this. Now, if you want to start mark region that will be your support. Now, I told you that your support region is a strong resistance area that was tested multiple times before price breakthrough to the upside. So how do you start marking it? Now, I told you that to start marking, you have to mark from right to left. And where are you going to be marking it? You're not going to mark lows. No. You will be marking, now, you will be marking resistance region. Resistance. I told you resistance that was resisting from passing. An area that resisted something from passing before finally, passing through. And now, I told you that you start marking each eyes. Let's say, for example, you mark this eye first. You look at the left hand side. After you mark the current eye, this current break of market structure here, then you start investigating this current break of market structure which you just marked right here, this current one right there, which you just marked. You start investigating around this is left hand side. The price reacted previously around that play before it breaks through. If it is no, then you have to move to the next and see. Now, this is the next here before price breakthrough. Now, you start investigating too. The price break multiple times before reacted multiple times before breaking it through because it must be from the left, right to left. Then you start investigating the price after break of this market structure. You draw the break of that market structure, the break of market structure. Then you investigate it to the left hand side. Did price break multiple times and reacted multiple times before breaking it through? Yes, you can see one, this is the actual break of market structure. See, price reacted 2. Then by the time you look at your this thing 2, price reacted 3. You can see, so this one has 3 touch, and I told you it must have minimum of 2 touch. You can see this is 3 touch, this is 2, 3 touch now. All right. In fact, if you draw the line for, you are likely to see that in the past that there were still some reaction there too before in the past. In fact, you might even still realize that price might also reacted as support before breaking it in the past too, like this. But you have to first mark it from your right, then investigate whether there are multiple touch by your left. So, like I said, the multiple touch should be closer to each other. It must be current touch. The touch must be current. Before you start looking for the left hand side, the previous touches, the current touch must have 2 touch, which means after this touch we see here, it must be current. You can see now that these 2 touch were current. That's what we want to see before we start seeing all those old ones. We don't just want to see, maybe, for example, some people, how they mark their support and resistance. Maybe after this break of market structure, now they bring a line here. Now, after they mark this line, all right, after they mark this line like this, after they mark this line, for example, they just see one break of market structure. They see one break of market structure like this, then they bring out a line and mark it because they see a break of market structure. Just one. Now they will now start looking for they will now start zooming in, be shifting to the left hand, shift to see whether far distant previously, whether price has reacted from it. They will start looking, maybe previously, they will start looking. By the time they are looking, by the time they've moved their chart to the left hand side, they are not correctly seeing this current chart again here. That is not a proper support because that is not a proper support area because it is weak. Because that means you have to pull, you have to zoom, you have to move to the left hand side too far away before you can see the touch. No, the touch has to be current for you even without shifting to the left hand side too much. It has to be current. For example, you can see this thing here. We could see it here without zooming too much to the left. And if I don't want to zoom to the left hand side, it should be between this point here and this point here. So we shouldn't be moving our chart a bit. No, anything that makes you start moving your chart too much, that means that region is not a good region. All right. So that is it. Now, if we investigate that means this is your current support. Now, if you investigate further to see again, we add a break of market structure right here too as well. This place too again. I told you must draw it from the right to left. Now you investigate it too. Let's say you investigate it because sometimes price might even sweep past it. You can see this is a multiple touch too. 2 touch. You can see price coming. You see? You see it? 2 touch. You see 2 touch before the break of market structure. All right. I told you, and it can also be in form of this. For example, let's say why before price break to the upside like this. Let's say we already have before price break to the upside. Let's say you are in a downtrend before, you must definitely before you trade support, you must be in a downtrend and maybe price break to the upside like this. Now price has switched to the upside like this. Price about to break through. Price retested like this. Price still retested like this. Price retested before it finally break. This is a strong support region. All right, because it was an area of multiple this is the current one you mark. All right, you mark it because I told you it's from right to left. All right, it must always be from right to left. That means this is an area price retested multiple times before it finally break through. That means this region right here is a strong support region that prevented price from passing multiple times, and it is current. All right. Now, so the question is, how do you trade? You don't just because you see support, you don't just want to. I see people place their entry here. They will just put their stop loss here. Then they will expect that price should come like this, take them in and go. No, you don't trade it this way because it is actually dangerous. Price might just sweep you out because most importantly, when this current break has an imbalance here, Okay, so it is dangerous. And when marking your support and resistance, you want to ensure that you put this line at the top of the wicks and not at the top of the body candle and not the wicks. But sometimes it can be at the top of the wicks, but it's better to put it at the what body of the candle. I will show you an example. So how do you trade it? Before I move to example, let me clear this in and show you how to trade it. So how do you trade it? Let's say we have our what? We've already gotten our support, or maybe we've already gotten, let's say we're in a downtrend, we are trying to sell. Okay, we are trying to, to sell, and price reacted from here, still came back to react again before finally break, which means this is our strong resistance region now. All right, this is our strong resistance region. Maybe this is our strong resistance region that reacted, multiple times before price breakthrough. Okay, or better still, it might be that it was an area whereby we already have, an uptrend before too. You can see an area whereby we already have an uptrend, because that is always the strongest. You see, whereby we already have a uptrend before price coming back, reacted, still came back, reacted again and break. So that means how many touch do we have from here? That means we have how many touch? 1, 2, 3, 4. All right. Now, so how do you want to trade this thing? Now, you can't trade this thing without liquidity, and the liquidity you need is 2. Now, it means this region now you have to wait for number one. You see that price already returned here, 50% fib level. All right, you bring out your fib level. If you bring out a fib, all right, you bring out a fib. This is where price push away. All right, this is the last place price got before pushing away. The last reaction and the push away, you bring out your fib and you draw it up to this place. Then you see that price, you will need liquidity. Maybe see price push back, but did not touch this support. Did not touch it. Price pull back like this and break. Okay. Now you've gotten your liquidity. All right. By the time price is coming back, you've gotten the liquidity you need. You need it because some people will think this is a resistance. They want to start and sell. They want to start selling from there. So what price will do is price will just come back again. By the time you see price come back again, price might still pull back for you again to deceive them. Then price will not touch this resistance, resistance. By the time price touch this resistance, you are not trading it now. No, don't trade it yet. Because remember that there's an imbalance up here. Because price might still want to come out and feel the imbalance sometimes. But you see, price will just come here, take these guys with this liquidity away. You see, it's what price will do. You are not trading yet. Too. What you want to do is you want to see price push down as if you want to be going. Then you wait again as if price want to go up, but it cannot break this again. Price will not break this guy again. You see it. So immediately price, the candle now close above this guy here. Candle close. Oh, once candle close, now you want to enter. This thing occurs in gold, and I've been using it to win gold. Then your stop loss should be what? Above here that price go to. This place that price go to. Not this, but this guy here. Where are you targeting? You're targeting this low, where price is coming from, or target 2 hour or 3 hour, whichever one. But target 3 hour minimum. Or if there's a liquidity here, if you see that there's a next this thing here, price will come and clear it. Maybe there's something like this here. So that is a liquidity. Price will come back and clear it. See it. That's what I want to do. So just see the price will just come back and take them away. Now, let's say, remember that I told you that there might be imbalance here too. There might be some sort of imbalance here. Now, let's say after your enterprise came back and take you away, don't feel bad. You have not missed the trade. Oh. Like I said, you have not missed the trade. Now, if price even take you out here, normally, when you put your stop loss, normally your stop loss is supposed to be here. But because it's too big, that is why you should put it here. Trust me. See, if price come back to take you out, you have not missed the trade. Oh. You have not missed the trade because if there's an imbalance here, see what price will do? Price will be going like this. If price touch this guy, now you should enter again. If price push like this, but could not break this high again. Let's say price push again. After price reacted from that imbalance, price push back like this. Okay, so you will wait, but could not break through this high again. So you will wait for price to act as if you want to go to the downside. See, then immediately candle close above this guy. This is your opportunity to enter again. Then you put your stop loss above this guy or above here like this. Then where? Target this low, 3 hour or target this guy. Trust me. Very, very profitable, very, very profitable strategy. Now let me show you example. Now for the buy, let's say you have something like this. Okay. Okay. Let's say you have something like this, for example. Let's say you're in a downtrend now for the buy. All of a sudden, price start going back up. Price will start doing something like this. Only for price to get here, reacted. It might even push back like this, still come back, react, still push back, then break. Okay. Then you need liquidity. You need price to pull back like this, break. Now, what I've forgotten to tell you here before we continue is that, see, price might not pull back like this sometimes. So sometimes it might be that it's when price is coming. See, price will not even break this through again. Price will just get here for you. See, price will act as if it's coming to this support here, this resistance here. Okay, price will act as if it's coming to that resistance before it now do the pullback. So it's not a must to break this low before you now do the pullback for you. You see, before now taking you in. So the same thing here, you can see it. By the time I draw your line, I told you it's always from what? Right to left. You see it. You start drawing, you draw this guy yet, yeah. After you saw a break of market structure. And the best way to know it is look for a place whereby price break to the upside or downside aggressively. That should be the point you should start targeting. Aggressively. Rally based rally, aggressive break. I will show you examples. Now, you just draw the line to the left hand side. Then start investigating it because this guy first time is it multiple touch, must be two touch. You can see first touch one, second touch, third touch. So you see that it's three. This region is good. So you can see price now pull back like this, give us liquidity, right? Sometimes I told you that the price might not break to the upside again, okay? So when you give you that liquidity, but then liquidity has been given to you now. So this is your liquidity now, all right? This is your liquidity. What should you see? You see that price will come back to touch the support. Now you're not trading yet, though. Now what you want to do is you want to wait, okay, for the price to push up, okay, act as if you want to continue to the upside, then push back as if you want to continue to the downside again, but could not break this low again. All right. Then at the break of this up again, as if you want to continue, once candle close above it in such a way that after testing the support, you can no longer break below this low again. Okay, once candle, then you bring your entry. You quickly enter at the candle close. The stop loss should be below here. Normally, your stop loss is supposed to be here, but because it might be too far, so put it here. All right. Then target 3 RR or next liquidity. This guy right here. All right. That is how to trade it. Now, let's say price not take you out because we see some situation whereby price might still take you out to come and fill imbalance here. You have not missed the trade, though. That means price just still needed more liquidity. What you should know, how you will know you will not miss the trade is when price reacted, act as you want to continue going, push back but could not break again. Then at the break of this candle close, enter. That is your last chance. Okay, this is your last chance. Enter. Your stop loss can be here or here. All right. Target upside. Now, anything that makes, because price is not supposed to go to upside. Now, anything that makes price to take you out and break, that means the trend has changed. Don't bother again, okay? Don't bother again. So what you should be looking for is look for the next distance. Let's say when price come back here, it reacted from here, push back, reacted from here again, push back, then break you down to the downside. That means from there, the trend has changed. What should you do then? This is the current break. You mark it, investigate it. You first mark from the right, then investigate it to the left hand side. And you see multiple touch. What is from there? Multiple touch. 1, 2, 3, 4. That is a strong support. That is a strong resistance zone. So what are you? All right. So now once price just breaks, so what do you want? What immediately you see the break? You can see multiple touch. The next thing, you have to wait. We need liquidity now. So you see price will just start playing. Once price want to get there, you can see price pull back. Price can still come back here again, still pull back to give you liquidity. Then you see that price will now mitigate. Immediately you see price mitigate, but still put in mind that we have imbalance right here. Okay. So immediately price gets here, touch it. You will start seeing the reaction. Don't enter yet. Let price act as if it wants to be going our way. Then we are still not entering. We need a pullback. All right. We need a pullback. Then we need a break, a candle close. Immediately we got that break, you see it, we just enter straight away. All right. And I will show you that the trade I'm building small capital, small money. When I want to do is test a strategy, I use it on small money to build a small money to a big one. That's how I know. And I will show you that I currently trading this thing I just told you right now. And I will show you an example of a trade I'm currently on. Now you will see, now immediately after the break, put your stop loss above here, above this guy here. Okay. Then target this low price coming from. All right. Target this low. Price is coming from. You don't want to target. See it, make your money or 3R or something. Now let's say price take you out. Let's say price now go and take you out. That means price want to come and mitigate this guy here. See, that means you've not missed out. What you just need is what? You wait whether price want to go your way again. Then at the close of this candle, enter. Okay. Then your stop loss above here or here. Then TP should be down here. All right. That is it. It's as simple as that. Now, let me go and show you example on gold. First and foremost, let me show you. Let me reset. This is gold 1 hour. So I was doing let me go to 4 hours. All right, let me go to 4 hours. Let me go to 4 hours. Okay. So I was this is gold. When I open gold, I realized that gold usually work with support and resistance very, very well because I have multiple strategy. But I personally trade XBI personally across people that know me knows that I trade SBI, including those in our trading community. They knows I trade SBI. But when I realized gold and NAS 100, they work with XBI and they work with support and resistance. So, and I've been milking gold. That is just the truth. This is my trade of gold here. So I was not in line for you. I was almost in take profit before gold take me away in this one. But I want all this you are seeing here. Combination of what? SBI and support and resistance. Because support and resistance work well. So I won't come and lie. Take me out here, almost achieve my TP. This is an SBI, not support and resistance. But there are some here that they are support and resistance. Okay. And so I would show you example. Let me show you. What I did was I came to gold. I opened. I saw gold was on a strong uptrend, which you can see in 4 hours that gold was in a strong uptrend. All right. If gold is in a strong uptrend, what do you think I'm looking for? I'm looking for an area of interest, a support region whereby when price get there, price will reverse. So now when I met gold, honestly, when I met gold, this is where I saw it around this region. Around this region was where I met gold. This region. Let me just show you. Around this region. Let me just replay play. I want to show you example. This is where I saw gold. Yeah. I think. Yeah, this is where I saw made gold. So when I saw gold, now this is the mistake many people make. Now let's say some people, if they want to draw their support for gold, do you know what they will do? They will see that this is a low. They will now bring mark and mark here. This is wrong because they see that this is the area price come here tested, price come here tested. So to them, they expect price when price gets here. That's the way they mark their support to. That's the way they mark their support and resistance. So they will say this is a support because this is too touch here. That they expect price to touch like this and continue to the upside. This is a wrong way of marking support. When you want to mark support, you don't mark the low of a candle. No, you don't mark the low. You don't mark your higher low. You know that this is your low like this. When you see a break on market structure, this is our higher low. In an uptrend, you don't mark your higher low. And if you are trying to mark resistance, for example, let's say you're trying to mark resistance, no, don't make that mistake of marking your lower high. No, don't mark it. Don't mark your lower high. That is not your resistance. Please don't mark this lower high. Don't mark it. Don't mark this lower high as your resistance and don't mark this low as support. Even if price maybe has come back like no, you don't mark it like that. Okay, you don't mark it like that. So what you want to do is if you want to mark your support, like I said before, should be a previous resistance, a previous strong resistance that was tested multiple times. Previous resistance that was tested multiple times. Previous place, price did not prevent something from passing through. Just like the example of the bouncer. Your resistance should be the previous place. Your support should be the previous position, that point where you are struggling, to pass through into that club for the first time that they are resisting you from passing before you finally pass through. Immediately you pass to that point is your support. Because it means that when price is coming to that point, the same point that resisted you from passing through, now you've passed through back. By the time you are coming, that point is strong enough to hold you. Okay, that point is easier for you to hold you. Okay, so for that place, what did I now see? Since price is already here, I told you must mark from right to left, from right to left. I told you that I want to mark a support or resistance, it must always be from right to left. Now, but in this scenario now, you can see that, and I told that if you want to mark a support and resistance, you have to mark a you have to an area of resistance, that was tested multiple times before. So from here, you could see there's no way we want to mark our support and we start marking here. It does not make any sense. All right. Support should be down. That means area whereby when price gets to, we reverse. So that now brings me to, okay, this is not the region. That means this is not the current uptrend. Ignoring all this, that means this is not the current uptrend here we have that is left for me to mark. So because there's no way, there's nothing here that will signify to me that price will react from here. There's nothing signifying to me here that when price gets here and pull, the only thing that will signify for will be things from here. Okay, so coming to this side, and I see, is there an area where price reacted multiple times? You first look for an area of break of market structure, and I saw this area, this guy right here, this break of market structure. I saw this break of market structure. That is the current break of market structure I have. The current break of market structure I would have had was this guy. Okay, and that break of market structure, see, the current break of market structure for me that I would have had is this guy. Okay, so that break of market structure was not tested multiple times. Okay, assuming when price was coming, see, price reacted like this. It would have been a strong support, okay, when price was coming. So price just come back and break it. So that region was not tested multiple times to me. All right. But now, when I mark this guy, see, when I mark the break of market structure, I realized that this guy here was tested multiple times. See, I told that in the area of market structure, this is the break of market structure. Drawing my line to the left-hand side, see, and I realized something that, see, there was multiple touch here. See, and I told you that it is best to always put it at the candle body. But sometimes, if the second touch, just ensure that the two touch each other. You can see it. And I mark this guy and I realize that this guy right here, there was a multiple touch here. See, touch one, touch two, resistance now, price pullback, price go there, still push away. All right, before breaking. Although this guy too acted as multiple touch, anyways, you can see this guy acted as multiple touch. Yeah, this guy acted as multiple touch. You see, two touch, price touch it, price push away, price come back, touch it, push away, they finally break. It acted as multiple touch. And what do you see that price did when price go there? See, what do you see that price did? When price go there, you see some reaction, right? You see some reaction, see some reaction, see some reaction. Okay, you see some reaction. Now I will tell you how to show. But for me, when I came here, price was already here, so there was no point to trade this guy again. Price was already here for me. There was no point to trade this guy again. Since price was already here, price already break through now. So the next point of action will be, where is the next resistance? Here, multiple touch. You can see touch, pullback, touch, pullback. It must be recent. Now, you will not draw the line out. You see it. You draw it, you extend it to the, see it. Okay. Now, what I mean by, since this is our right hand side, for example, let's say we got in this multiple touch. Now, what we can do again is we can extend it to the what? To the left hand side, but rather you can just use this line right here. This is the line we're supposed to use. You can just use this line right here. See this line? You can just use it right here. So there was multiple touch right here, but normally you can first put it at the edge of the wicks, then ensure that it touches the second one to be multiple touch. You can see this is multiple touch, but like I told you, it's always good. Candle body is always good, but sometimes you might miss out with candle body. Now, if you want to investigate, you can go and investigate the left hand side if you wish. But because this is gold, I know gold has been strongly bullish. So gold in the previous class not printed. You cannot see multiple touch for this region. The only multiple touch you have is these two. All right, you can see. Now, what do we expect? Immediately I saw these things, I knew this was a strong region. But does that mean I will now set my entry like this? No, 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 no. I cannot do that. Don't do that. Okay. So now this is it. When you mark your support and resistance line on 4 hours, your entry time frame can be 1 hour, 30 minutes, and 15 minutes. All right. Your entry time frame can be 1 hour, 30 minutes, and 15 minutes. Okay. So when I see this region, what did I do? I was waiting for price to actually come. So whenever price come to this region like this, what will I do? Immediately price come there, my buying should know. I want to see a reaction. But that's not even the thing. Immediately price touches. What will make me buy from here in my entry time frame, which is 1 hour, 30 minutes, or 15 minutes, is that I set price to push as if it want to go. Then I set a pullback, then a breakthrough with candle close. Immediately I see this thing like this, price close like this, I will enter. Okay, I will enter this candle close. My stop loss will be where? To be below here. I'll target my 3 hour and get out, or target another liquidity here. That is why I will trade it. But like I told you that while price is coming, it's always good to have what? Liquidity. All right. You want to have liquidity while price is coming. You see, you want to have something like this. Okay, liquidity. Okay, before price, so that this is your liquidity. But the thing is, sometimes in higher time frame like 4 hours, you might not see liquidity because higher time frame 4 hours is strong. But when you see liquidity, it makes that pause stronger for you because you know now it makes it stronger for you. All right, you want to see liquidity because this guy would have acted as liquidity for this guy, but it's too far. So it's always good for it to be closer, but you might not see it on 4 hours sometimes. So that is it. But now, since we are waiting for this point to buy, instead of waiting, we already know where we've already marked our support, right? We've already marked our support. This is our support line, area of multiple resistance that was tested before it breaks. We already marked it out. But does that mean we have to wait for price to get here before we then start buying? No, we can go to lower time frame like 1 hour, 30 minutes, or 15 minutes and see whether we will see similar thing here to sell down to this place. And that's what I did. And I want to show you. You can see where this is where price is currently. You can see, and this red place is my support line, right? Now, this is where I made price currently, okay? This is where price is currently. This is where price is currently. You can see it. Now, I told you that I want to mark current from right to left. And you can see this is the current break of market structure. All right. I told you when you're marking your resistance, you don't want to mark resistance now. We cannot want to mark resistance and start marking the up. No, it has to be the down that price break market structure to the downside. Remember the definition I gave to you as your resistance. I said your resistance are a previous strong support region that was tested multiple times before the break. And how do you know? You mark your break of market structure. This is the current break of market structure we have here. Immediately we mark this current break of market structure we have here. I told you drop base drop, drop base drop. You can see it, drop base drop to the downside. Immediately we see this. What did we see next? Now I told you that draw the line to the what? To the left hand side to go and investigate it. And I told you that it must not be really far too much. Okay. So instead of using this line, I just bring this line like this, draw it like this. A break of market structure to the downside. You can see immediately you see that okay, price has broken market structure to the downside. What is the next? Now investigate it to see whether there was multiple touch right there. Was there multiple touch right there? It must not be where something that will be zooming too much, too much. It must something that must quickly be able to see quickly. If you zoom in, you can see. By the time I mark here, this is what we want to first mark here. This current place is what we want to mark first. Break of market structure to the downside. Immediately we mark it, we got our break of market structure to the downside. Then we want to investigate whether there was some sort of reaction too at the left hand side, whether there are multiple touch, because this is one touch. If there's no other touch too at the left hand side, we can't trade it. This is one. It must be a minimum of two. Now, looking at this side, we saw another one. See, two. You see, price reacted. Three. Then this one, four. So there's four touch here. So you can see it. There's what? Four touch over here. All right. Four touch over here. Now, if you look at this guy too, the same thing. After the break of this market structures, drop, base, drop. If you draw this line here, see, what did you see? Open your eye very well. What did you see? Drop, base, drop two again. You see? What did you see? Drop, base, drop. What I told you. Current, it must always be from right to left. Drop, base, drop. Then that means at that point in time, that was our current break of market short to the downside. You draw it out. After you draw it out, then investigate it to see at the left hand side whether there was multiple touch. There was. This is one. This is another one. Two. You can see it. See it as a leg of a baby. You put a baby in your leg. The two legs of that baby is standing on your lap. That is two touch. All right? Two touch. Two baby hand raised up to hold something. They say, raise your hand up. You need to raise your hand up. Two hands up. Two touch. Okay, you can see two. You can see that in the past, it even acted as what? Resistance. You see, but we can't count the resistance as three touch. So we are counting the touch before the break to the downside. You can see. So that is multiple touch. You can see it. Multiple touch, two times. And why do you see it happen? Well, it's after the touch price break. For you to trade it, you can't just trade it. We wait. Why do we wait for price to return there and give you liquidity? And what do you see here? You can see before even when price pullback and break, and you can see price give us liquidity here. See, price give us liquidity that we need close to it. And you see price came back to tested it, retested. That's what you see. Immediately price retested. Are you entering yet? No. But because this is 15 minutes, now let's say you start doing your analysis on 15 minutes, you can use 5 minutes as your what? Entry time frame for 15 minutes or even 1 minute, but it's not advisable for if you're not a professional. All right. So let's say immediately price touch, normally how you would have traded this thing, normally you're supposed to go to 5 minutes for entry time frame. And if you go to entry time frame for this particular guy right here, you see, immediately price touch it, because you want to use 15 minutes to mark your support and resistance so that you don't get confused, okay? But immediately price touch, you can see that by the time price was coming back, and this is the liquidity we marked previously. And you can see that when price got here, touch it. I told you that you have to wait for a pullback. And you can see when price start coming, you wait for a pullback. See this pullback here? I'm literally trying to close below it here. Then what should you do? You will then enter at this candle close. Stop loss should be where? Above this guy right here. Then you can target your this place, or your 3RR, or target the next liquidity, which is this guy right here. The next liquidity you should target to be this guy right here. Okay? Or target your 2RR, because you know that price is definitely going to come back. Still check if there's other liquidity right here. You can target it, you can see it. You can target the next low here. Target your 2RR or 3RR. You can see that is for that, right? Now, for this one, which I just told you, you can see this thing right here. Multiple touch. 1. We investigated it. 2, 3, 4. Now, so what are we going to do? This is 5 minutes. Oh, no, we are already in 5 minutes now. So now, when price is coming, we just wait and see what price will do for us. And let's say we're in 15 minutes. That's where we'll mark it, because we want to use 15 minutes to mark our support line. You see? Now, let's see what price will do. Remember, I told you that we need liquidity. Liquidity has not formed yet for us. So we need liquidity. So we need the liquidity. I told you in form of pullback. Now, liquidity has formed. Liquidity must form for you. See, liquidity has formed for you. All right? Liquidity has formed for you. Now, what you want to do, you want to wait for price to now come and react at this. Normally, I told you that you're supposed to mark it at the candle body. See this candle body. It's better to always mark candle body, but sometimes you might just miss out. But candle body is still the best, because sometimes price might first react at this place here. All right? Price might first react at this place before pushing back. Then it will now go and react at candle body. Or better still, you can mark two lines. Mark one at the wicks, then bring another one and mark at the candle body. All right? And give that other one, you can give it another color like blue. I think that is the best. We know that those are your points, okay? So mark candle body, we know that price reacted from it. You can see price reacted from it. So I think that is the best way you should mark it. Mark the wicks, mark the candle body. That is the best way. Now we've gotten our liquidity. So how do you trade it? Wait for price to go back there. See, leave price to be going. Oh, price must go and touch it for you. You see, price has touched it. You see, price has touched it. You see, price even touch it, almost touch the candle body. Now, are you entering now? No. You see, price is pulling back down. You can even go to 5 minutes to look for your confirmation, okay? Go to 5 minutes to look for your confirmation. You can see price coming back down. You see? Are we entering yet? No. Don't enter yet too. Don't enter yet. You can even see the reason why price came back here to come and retouch this place. You can see there was multiple touch here too. You see? In 5 minutes here, we have multiple touch here too. You can see it. It's even 2. See? When price goes here, price still gets some touch here, which means currently 1, 2, and coupled with all these ones, 3, 4, 5. You see it? Because in our 5 minutes, this is our drop base drop here, drop base drop, and this drop here is also reacting from here. So that is the concept, you see. So when price come there, price has given us our liquidity that we want. You see, take us in, don't enter yet. All right. So like I said, once price touch it, so the only thing that make us take it straight is we want price to break below this guy. Okay. Immediately price break below this guy, candle close, we enter. So now let's see whether that one happen. You see, price will continue going. So to save you a lot of losses, that's how to trade it. We don't want wicks. We want a candle close. We don't want wicks. It must close with body of candle. No, you can see that this one is wicks. So that's why I will not advise you to set the buy stop. Wait for proper candle body to close. All right. You see, proper candle body has closed. Now that proper candle body has closed, you can now put your entry. Or if you know that you want to still wait for some sort of pullback a bit, you can, but you might miss out. Now you can now buy. Your stop loss should be here. This place that price touch, not this pullback up. Oh, this one here. This place that price got to before it came here to push back. Now where are you targeting? Target your 2RR or any RR. I usually target minimum of 3RR. But better still, what you should do is, you see, this is supposed to be where you should target, but it's too small. So look for the next liquidity. Go and look for the next liquidity in 15 minutes. Go back to your higher time frame, which is your 15 minutes. Ask yourself, where is the next liquidity? And the next liquidity is this guy right here. This low here. That low will be taken. Okay, that is the next liquidity. So what should you do? Then target here. So that is your 2.7 RR, right? Now you will see what price will do. Now, you see, Price just continue going, boom. You see? Now remember where we marked our higher time frame POI that was here. You can see price has mitigated our higher time frame POI. And we're in 15 minutes. Now look at it. Let me go back to 1 hour for you. 1 hour and 4 hours. Let me go back to 1 hour and 4 hours for you. Remember that high time frame POI? I told you that I should always put at the candle. Let's go back to 4 hours, for example. Now in our 4 hours, I told you that candle body is good as well and candle wicks. Okay, I told you to always mark the two. Okay, so you can just mark the two. In this 4 hours, these are wicks here, the multiple touch. Then you can mark this and call it blue, which integrates the candle body as well, which is 2. So it's C4 within it. Okay, by the time you go to 1 hour, you will see that inside it in 1 hour, there was still, it became 3 touch in 1 hour. See, because if you are to mark our this thing in 1 hour, that means this is the current break of market structure. Because I told you it's from what? The current one, which is from what? Right to left. This is the current break of market structure, right? If you are to mark this support from 1 hour, this is the current break of market structure. That means that will be the current place we will put our line and see if price tested it. That will be the current place in 1 hour. See? So if you bring it here to the candle, right? You see it? So that would be the current place. Whereby if it was 4 hours will be here. But since you come, because we did not see anything 4 hours, but coming to 1 hour, you see, we're able to adjust it because this is a rally based rally. And I told you that surely the best way is for it to be an area whereby price break with momentum. You can see momentum break to the upside. You see it? Rally. Base can be playing. Okay, but the rally break must be a momentum place. It will really help you. You can see this was the current break of market structure to the upside. Then you mark the break of market structure. Then you investigate whether there are multiple touches. There is. After this break of this market structure here, when we investigate it to the left hand side, see a touch, 1, 2, another touch, 3. So that means that resistance that was now finally broken, that resistance region has become your strong support zone. And you wait for price to react from it. You can see this is 1 hour and price has come back there reacting from it. Are you going to trade it now? No. I could told you in higher time frames sometimes it might not give you inducement. It might not give you liquidity. Lower time frames will give you, most time give you liquidity like that. So, but in your entry time frame, then our entry time frame is what 15 minutes or 30 minutes or 1 hour. You can use your 1 hour to enter, you can use 15 minutes to enter, you can use 30 minutes to enter. Okay, it's just that 15 minutes will present early entry for you compared to 1 hour. Now, let me show you what I mean by that. Now, from here, see, we're in 15 minutes now. You can see there's our support region that we marked. An area, a previous resistance area that was tested multiple times before it finally break through. How do we enter this trade? We wait again through what I just explained to you. As price touch, we are not entering yet. We expect price to start going. We expect a pullback. Then we expect that pullback should not break this low. We expect a close above this candle close, then will break. Anything that make this pullback, let's say why price start going, we expect this and go and break it to the upside. All right. From here, let's say this guy now come here and break again to this downside. That means the process we will need to restart the process. What are we looking for now? We expect price to still go like this, pull back without still breaking this low. It must not break it, then break this again back. All right, then we enter at candle close. Why are we doing that? Because price already break this low back. So it means we are starting all over, pull back. You could not break this. By the time you break this guy, candle close, we enter. Our stop loss will be here or here. So let's see whether it happened. Now, this is our entry time for 15 minutes for if we mark our listing on H4, 15 minutes, 30 minutes, 1 hour is good. If we mark it on H2, H1, 5 minutes, 10 minutes is good, or even 15 minutes at time. So now let's see. See, you see, price has started pulling back. Boom, that's what we want. You see the pullback, candle close. Price could not break this guy in. What are we looking for? Enter straight. Your stop loss is where? Should be this low. Where are you targeting? Target your 2 hour, 3 hour, or go and target what? Next liquidity, which is here. Price will come and sweep it. That should be the next liquidity you are targeting. That price will sweep it. How many RR? 3.37 RR. Now let's see whether price sweep it out. Let's see whether price go there. Now let me show you something I wanted to show you before I talked about then early entry. Now remember that this is 15 minutes, right? That we've entered here in 15 minutes. Remember that this is 15 minutes has presented a pullback and a close of that candle for us, and we've been able to enter quickly, right? We've been able to enter quickly, right? We've been able to enter quickly, right? Now, If we were trying to use 1 hour for our entry, we wouldn't have gotten entry yet. 15 minutes has presented its own entry for us. But now let's say it is 1 hour. Now see, 1 hour has not presented entry for us, but 1 hour too, we can still use it. Now we will wait again for the same thing. You see, 1 hour has pulled back. The only time that we enter, let's say we're using 1 hour as our confirmation. You see, finally 1 hour break. After candle close, that means in your 1 hour, it is now here that you want to enter. Your stop loss will now be below here, not here. Can you see 15 minutes already present us a quick entry? 1 hour is just presenting us his own here. You see it? You see? So you see it now. You see it now. You will not be targeting here. That means we only make about 1.5 RR. Now 4 hours can still present its own entry too, but it will be it will take a lot of time. Now even 5 minutes would have presented early entry than 15 minutes, I guess. I told you 5 minutes too would have presented. Just that 15 minutes is strong. Look at where 5 minutes presented his own entry. See, after price retrace, it could not go back to break our low here, then close above it. Now, this is where 5 minutes would have presented us with our own entry. See it here. All right, you see? See it here. Quick entry in 5 minutes, stop loss here. Don't put your stop loss below here. You see the reason why I said you must never put your stop loss below this pullback low. But rather, the initial place where the price started, after it touched our resistance or support, where it started coming from should be where your low is. You see, it price is taking you out again. You see? And so that is why the low should be here. You see this one, the low too should be here. Not this. You see your 15-minute place here. See 5 minutes has already given us quick entry. And if we use 5 minutes to enter it, and we target this high, told the price is going to, see, this would have given 4.79 RR. But using 15 minutes give you 3.37 RR. You see it. So it's just that 15 minutes is still good because 5 minutes, but for me, I can use 5 minutes. I can even use 1 minute to enter here. I know what I'm looking for. Okay. So now let's now go back to our 15 minutes and see how it plays out. You see that it works. Now see. It works well on good on NAS 100. See it. It works on volatility index as well. You see it. It works. Can you see it? We've won this trade. You see? Even if it is 5 minutes, you've won the trade. You see it? So it works. You see it? It works. So that is it. Now let me now show you. I took this trade. I win. Then I took this particular one, which you can see from here. I won. As you can see, yes, I won this trade. I used $12 to enter this trade. I think I made around 68 or something, as you can see on your screen. Then I took this NAS 100. I'm currently in this NAS 100. Yes, and this is what I saw. See, I was in this NAS. I'm currently in this NAS 100. See this NAS 100. I'm there. What did I see that made me enter the trade? I told you from right to left. We're in a downtrend now, right? We're in a downtrend. So price was around somewhere around there now because we want to sell. Since you're in a downtrend, you want to sell, right? So I think price was around somewhere here. And I want to mark my what? I want to mark my resistance. What did I tell you as a resistance? Your resistance, if you want to mark your resistance, some people, the mistake they do is they'll go and be marking this eye or this eye or this eye. No, 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 no. That's the wrong way to mark resistance. You cannot mark resistance for an eye now. Use the simple illustration I gave to you. Your resistance should be a previous strong support that was tested multiple times that broken. What made the support strong? It was tested multiple times. It could not hold, then it breaks. Looking at that, and you want to look for a what drop base drop now. You want a place whereby price break market to the downside and start investigating it, to the left hand side, whether it has multiple touch before the break. Okay, that means it was previously support that was preventing price from pulling forward to the downside, but price finally break it. Okay, so it finally broke. So how do I do it? And I told you that it's always good if you look, just focus your eyes on a place where there's what momentum break to the downside, momentum candle breaking candle to the downside. What do we mean by momentum candle? A candle with imbalance, whereby price just break aggressively without an impulsive break. Let's say you have something like this, then this pullback can be playing. The pullback can be playing, but immediately price want to break. There must not be interference. Let's say you want to break to the downside. All the candle that breaks it must all be red. Straight down, all be red without green. We don't want to see any green in the sense that we see some small pullback inside like this. It's not as if you see that it's not good. I'm just telling you the quickest way to quickly know the region to start looking for. But you see a break. After you see the break, you can start investigating to see whether there's a multiple touch, something like that. Okay. So that is it. So I saw this. Immediately I saw this break to the downside. I just started investigating it. I saw a break, I brought my line for this current. This is the first current break of market to the downside right here. Drawing my line to this side, this is not the multiple touch, but price closed above this too much, so it was not multiple touch. So I still saw another break up here. See a break up here, a break to the downside up here. In fact, I saw this break as well. I saw this break as well. This break of market structure to the downside too here. Looking at this place to know there was no multiple touch there. You can see it. Candlestick close below it. Then I saw this. You see, and now you go to this one here. See it? And I saw multiple touch. You see, price came back here, retest, pull back, came back there, pull back, then finally break aggressively to the downside. That means two touch minimum. You see, that means price was trying to go down, but there was something resisting it, preventing it from going down there. Support was strong before. You can see the support was strong before, and I told you, you can always, you see, support was strong before. Support was strong before. So price came. He tried, they did not allow. He tried, he went back again, still tried to enter the club again. They still did not allow him from entering the club. Then he still went back again. Finally, he put the spray on their eyes and break, boom, to the downside. Finally, that support region that was strong before, that it has now been broken. It tested multiple times. And if you investigate it to the right-hand side, you can see that it even acted as resistance here. See, if you investigate it further. So when I saw the break, multiple touch, break to the downside, I realized that this is a strong resistance for me. All right. This is a strong resistance for me. So what I just did was I wait for price to come. What did I tell you? I said you need liquidity. So looking at here, I saw a liquidity that price already came back here before and breaks to the downside. See, that gave me what? Liquidity. All right. So I've gotten liquidity that I want that must be close to it. You can see this is 15 minutes. And I wanted to use 5 minutes or 15 minutes to enter the trade. You can see that price now come back and touch line. Now remember this one now, it has an imbalance, which I told you. Initially, when I first took this trade, when price touched this resistance here, when price touched this resistance right here, I used 15 minutes to take it. I did not even bother going to 5 minutes. All right. I did not bother. So I just used 15 minutes to take it. Because immediately I saw it, what did I see? I saw a break, a touch. So I was waiting. You can see price now came back in. So I was waiting for price to pull back. You see, price pullback. I was waiting for price to come and break it back after the pullback because since price already touched my resistance right here, I don't expect price to go and break here again. Okay, so I just wait, for this pullback. You can see price start pulling back from here. Then price break, but it could not break with full body candle, just sweep. So when I saw the sweep, I was not ready to, to take the trade. I was not ready to take the trade honestly because I was waiting for a full candle body close. Price came back here. It was still with wicks here, still pull back again. I just want a full body candle. You can see that it was still with wicks. But then I made a mistake and I went to go and enter. And I'm just showing you, being transparent with you guys to see the reason why I should always wait for candle body. Because you can see this guy has been breaking with wicks. Even this one too, I think it was still with wicks. Wicks could candle should close below this. But then I also let me enter, price has broken job. Because normally, I just expect that I took this as body, I enter here. Where should my stop loss be? My stop loss was above here. All right. Price took me out. Yes, and I know why. See, because of this imbalance. But I knew that since price took me out, I knew that I've not lost this trade. Right? I told you because this is support region and this imbalance, and this is liquidity, and I know for sure that price was definitely going to retrace back. All right. You just want to come and touch this imbalance. You take me out. No problem. What did I do? I have to wait. Now, I told you that to enter this trade, you have to wait for price to, pull back and not go again. So for this reason, when I saw this touch, you can go to 5 minutes. Because if you say you should trade it here, what you should have done normally from here is at this pullback, before the break, you will wait and candle close. And this is the candle closer. So you will now enter here and put your stop loss above here. And if you put it here, you will now go and target low or any major other this thing where there's liquidity, which is this low right here. Right, and you can see that price is going. But this would have been this would have been too big if you are putting your entry here. This entry would have been too big. This entry right here would have been too big. I'm putting your stop loss here. So in that case, it's better, since this is 15 minutes, to just go to 5 minutes or 1 minute, since you know that price has touched this place here. This is 5 minutes. Now you can see that when I see that price took me out, I just continue waiting for, price has already took me out. You can see immediately you see that price took me out. Now, see, price took me out. So I was still waiting whether I would get another break to the downside, honestly. You see, price pull back. So I was waiting whether price will come and break this here. Okay. Now you can see that when price got here, price now go and fill in the what? The imbalance. Immediately I see this imbalance, let's say I'm in 5 minutes, what I would have done then is I wait again, price push up could not break. This is still a wish. I need the candle body. Then finally I got the candle body right here. So you'd have used here to enter. This is where you should have used to enter, and your stop loss will now be above this candle and you target the low where price is coming from. Okay, that is what you want to use for your confirmation. Or better still, you can just see this. This is it. Price. You can see price has broken to the upside again. Price is not supposed to break to the upside anymore. So that's why you can't use this. Right. But for me, I enter here. And this is why I enter here is because that was where I saw the price. When I opened it, actually the second time, this first one I entered before I slept in the middle of the night. But when I came back, I said I've been taking out. When I opened the chart, I just see this kind of thing here. Say, price has even breaks to this downside. But I just see this big candle now because I know that see this candle is too big, and I know that price, whenever there's a big momentum candle, I bring out my fib and I know that price will retrace back to 0.6. Really, I saw it around 0.6. I just enter again, I put my stop loss above it and just target it. So this is about what 3.15 and I'm currently in the trade. It's small money. I'm using it to build small account to big one. You can see I'm using it to build small account to a big one. But then I know for sure that price likely to still come to this liquidity right here. So I know for sure, right? Price likely to come to this point here. But to be on the safer side, you can just get out from here because it has already given me my minimum RR is always 3 RR. So since 3 RR is here, so I just enter. So this support and resistance strategy works very, very well if you use it properly. Okay. So if you have any questions, if you have any topics you want me to cover up again, I'll still be covering more topics around gold trading strategy, how to stacks and everything. But if you enjoy this lesson, sorry it's long, but I just have to break things down for you. You can kindly subscribe to this YouTube channel, okay? And don't forget to turn on your notification bell. And also don't forget to join our Telegram group where we give cryptos and Forex and volatility index signal. And if you're interested in learning how to trade properly, we have a mentorship program. We have a mentorship group where I mentor people how to trade within 3 months and they become a pro. So if you would like to enroll for a mentorship program, you can simply click the link below this video description or the one that just appeared on your screen, which will lead you to the site and you can then contact me from there. Or better still, you can contact me directly on Telegram. Okay.